In the course of your trading careers, you are going to come across different type of trading patterns. Remember, we said that price moves in form of waves and patterns. In this lesson, I have identified 6 or 7 of the most popular types of patterns. And this includes the symmetrical triangles, ascending triangles, descending triangles. So I said I have identified around 6 or 7 type of patterns. First is symmetrical triangles. You will come across ascending triangle. You'll come across descending triangle. Number 4, we are going to look at double tops and double bottoms. Number 5, double bottoms. We're going to look at head and shoulder. And last but not least, we are going to look at the reverse head and shoulder. Reverse head and shoulder patterns. So ideally, we are going to use and look at all these in conjunction with all other forms of technical analysis to help us get into positions, whether buys, sells, or neutral positions. So we are first going to look at these triangles, starting with the symmetrical triangle, then the ascending triangle, and then the descending triangles. Okay, so I'm going to rub all of this and remain with the symmetrical triangle. What are symmetrical triangles? So just to illustrate, a symmetrical triangle will form a shape like this. Okay? To illustrate, a symmetrical triangle will form a shape like this in your charts. All right? So in simple terms, symmetrical triangles, these are chart formations where the slopes of the price highs and the slopes of the price lows converge together to a point whereby it looks like a triangle. Okay? What am I saying? If you have your price like this, if this is your price, you are having this slope as price highs, okay, and this slope as your price lows. They are converging to form a triangle. Okay, this is what is called a symmetrical triangle. Okay, so what is happening during this formation is that the market is making lower high. This is a lower high, another lower high, another lower high, and this is a lower high, and this is a lower high, and this is a lower high, and these are higher lows and higher lows and higher lows and higher lows. All right, so that means that neither the buyers nor the sellers are in control of this market. Neither the buyers or the sellers are pushing this market enough to make a clear trend. That is why they are consolidating around here, forming a consolidation. Okay, so if this was a battle between buyers and sellers, then this would mean it would be a draw. Neither the buyers nor the sellers have enough strength to push the price further away from each other into a clear identifiable trend. Okay, so this formation will form a symmetrical triangle. Okay, good. So in this illustration, what happens is that we get lower highs and higher lows. As these two slopes comes closer and closer and closer, a breakout is imminent. Okay? We do not know what direction that breakout will be. That breakout can either happen to the downside or to the upside. Okay? Eventually, one side of the market will give in out of this consolidation. All right? So, how can we take advantage of this? It is very simple. We can either place orders here or here. We can place buy stop orders here or place sell stop orders there. To whatever direction the market will break, we will be in a position to enter the market and take advantage of that breakout. Okay? Good. As I said, this is an illustration of the formation of symmetrical triangles. The upper slope and the lower slope are converging together to form a kind of triangle where the price will end up in a consolidation. We do not know to which direction the price will break out from. We place buy and sell stop orders so that we may take advantage of this breakout. Okay, so this is all about symmetrical triangles. If this is clear, we are going to look at the ascending and descending triangles to see how different they are from the symmetrical triangle. Okay, any question? We can wrap this and look at the ascending triangle. Okay, good. Let us look at the ascending triangle. From the word ascending, ascending means something that is going higher and higher and higher. So in this case, it is expressed that the price is going higher and higher and higher. It is formed by a resistance area, okay, while the price going higher and higher forms an ascending slope. All right. So if we have a price representation, it will be represented as this. Okay. It will be represented with that curve. This line, as I earlier indicated, that the price has been unable to break this line. Okay. The price has been unable to break this line because it is a resistance area. Okay, while this slope, it is identified by higher lows. Okay, so this type of formation occurs when there is a resistant level here and a slope which has higher lows. So this is the first higher low, the second higher low, the third higher low, the fourth higher low, the fifth higher low, and the sixth higher low. So to form this ascending triangle, this price will come and consolidate around there. Okay, so you will observe that what happens during this time is that there is a certain level that the buyers cannot seem to break or exceed. However, the buyers are gradually starting to push this price higher and higher and higher, as evident by the higher lows. Okay, so in this illustration you can see that the buyers are starting to gain strength because of these higher lows. If enough buyers keep pushing more and more and more pressure on this resistance line, a breakout is bound to happen. In most cases, the buyers will win this battle against the resistance area if they keep on pushing more pressure, more bullish pressure on this resistance level. Okay? In some cases, the resistance level may be too strong and there is simply not enough buying power to push it either up, and the price may do this. If this area is very strong, the price may do this. But if there is enough bullish pressure, we may break through this resistance level and the price may go higher and higher and higher. Most of the time, the price will in fact go up to break that resistance level. Okay? Good. So in this case, you may place some buy stop orders above this resistance area so that in any case there is a valid breakout, it gets you into that trade and you may go higher with the buys. All right, so this is all about the ascending triangle. The next we are going to look at the descending triangles. You will guess rightly that the descending triangle is the exact opposite of the ascending triangle. Okay, so let us wrap this and have an illustration of the descending triangle. Descending. I don't know if I have written it well. Descending triangles. So what happens here is that you have a support area and there is a slope that is coming like that. So in descending triangles, there is a string of higher lows that will be happening around this place. Okay, it will be forming on the upper line. So if this was our price chart, we'll have something like this. Okay, we'll have something like this. That is our price. Then you are having a strings of what? Lower highs and lower highs and lower highs. So this is the first lower high, second lower high, third lower high, the fourth lower high, and as the price is going down and down and down. So we are having that this is a support level and the price is finding it hard to break through that area. Okay, so the lower line is a support level in which the price cannot seem to break, and in this illustration you can see that the price is gradually making lower highs and lower highs, which tells us that the sellers are starting to gain more ground than the buyers. Okay, most of the time we expect the price to break the support area and continue to fall down most of the time. Okay, so what you do in this case, you may set sell stop orders so that if this is a valid breakout, it gets you into the trade and you continue selling with the market. Okay, but other time the market can hit this support area and buy into that positions. Okay, so all the symmetrical triangles, the ascending triangles and descending triangles that we've just discussed, these patterns involve price moving into tighter and tighter price ranges, as you can see. So from this illustration, you can see that it provides a visual display of a battle between bulls and bears, between buyers and sellers, resulting into a consolidation phase. Okay? Good. But you see, all these triangles, they are generally categorized as continuation patterns. What is a continuation pattern? A continuation pattern basically means that the trend will continue when this pattern is done. Okay? So these triangles appear when a trend is temporarily pausing but is expected to continue. Okay? So the triangle patterns, the symmetrical ascending and descending triangles, they form during periods of indecision. You don't know if the markets will go up or down. This is a period of indecision. So this happens before a breakout in the prevailing trend direction. Okay? So we are done looking at the triangles, the symmetrical ascending and descending triangles. Next, we will be discussing and looking at the double top and double bottom. I'll be uploading this to our social media platform. Kindly subscribe so that you may get notified when we have our next class tutorial. Thank you.